Good Friday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Dimitri Pokemonic. How you doing, D?
Hey, Will, how's it going?
Good. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker-dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer.
Excellent.
And let me share my screen. While I'm sharing my screen, as a note, anybody joining us for the first time, Will and I, we do this show in the morning to help answer questions you may have about the Market Chameleon tools, the data, or analytics. If you want to ask your question live, we provide a link to Zoom. On that live chat, click on that link. It will take you over to Zoom. Once you get into Zoom, if you click on raise your hand, you could ask your question live. If you prefer to type your question, you can type it into the live chat on YouTube. Will's watching that, and he'll read them back to me. While we're waiting for people to join us and for more people to come in, or for people to put their questions in, we'll start out taking a look at the pre-market report to see what's trading, see if we could get some insights on what's trading in pre-market hours, and then we'll move on to the questions. So let's start out pre-market report. These are stocks trading in the pre-market hours. I'm going to scroll down here, and we get a list. We get a list of our most active stocks, our biggest percentage gainers, biggest percentage decliners. Coming down here, and I see that 83 stocks made our percentage gainers list, 49 on the decliners. So from this perspective, looks like we're setting up for a bullish bias at the open. I'm going to scroll back up here, and we do have a calendar view by day. Right now, we're on July 14th, and this is giving us a breakdown on the top level of what's going on in the market overall from a high level. So there are 509 stocks so far that traded in the pre-market that were higher than the previous day's close, 317 stocks that were lower. As far as volume of shares, there are 144 million shares traded on up volume versus 32.9 million on down volume. And if we convert those shares to dollar value, there was about $2.8 billion worth of stock trading higher versus 865 million lower. So from this perspective, it looks like we are setting up right now for a more bullish bias at the open. One more check we could do. We could scroll down here, and we see on this list that there are many stocks in there that are low cap stocks. It could be ETFs, leverage products, pretty much anything that's listed on a major US exchange. If it's trading in pre-market hours, it can make this list. And to narrow it down to a smaller group, we could use the filters above. So as an example, I'm going to use this one, an ETF filter. I'm going to drop it down. And when you select one of these ETFs, the table below will get filtered by stocks that are holdings in that ETF. So if we want to see what is trading in a pre-market hours, what's going on in pre-market hours in S&P 500 stocks, let's select this SPY ETF. That's the S&P 500 ETF. Click on that, and the list below gets filtered by stocks that are holdings in SPY, which are the S&P 500 constituents. And here we see 25 made our percentage gainers list, 6 on the decliners. So again, that is setting up for a slightly bullish bias at the open. I think some banks have come out with earnings, so we're kicking off earnings season. And I see here Wells Fargo, JP Morgan. This healthcare stock also reported earnings, United Health. So a couple stocks, a couple companies have reported earnings. Looks like so far those are positive in the early hours. And I think we talked about JP Morgan a little bit yesterday. So if do we have any questions? I could go now to the questions. Well, if not, I'll just kind of continue on some conversations from earlier or some, since we get through the email.
Let me see, something just popped in.
Okay.
No, nothing popping up. So go to where you were going to
go. So let me see. So let me just default to SPY, and let's talk about. All right, let me bring something up. I'm gonna bring up my paint, and sometimes we'll get questions that this usually starts out with the very, with people who are starting to look at the markets, trying to learn about them, and how do you evaluate things? How do you, look at things? Because, sometimes you get questions like, well, show me a trade. And then if you look at that trade, you want to evaluate if, let's say, the stock or option goes up or down, right? And it's important to understand that in the world of finance, right, it's not about trying to predict is something exactly going to go up or down each time, because you're never going to be able to make those types of predictions, because that's not how the stock market moves. It's unknowns, right? You're dealing with lots of unknowns and risks and things that could weigh on stocks and options and so forth. So there's no way to just pick, what is the best trade and then watch that trade and see, well, what is the outcome? And if the outcome is different than your outlook, then that means then that's not a good trade. And that's not how it works. And let me explain it this way, that it's not about being correct on every single outlook, right? It's about building a trading system that makes sense and that is profitable overall. That means with profits and losses, but on average, it is profitable. Okay. If you're trying to just do one single trade at a time, wait for that trade to pay off. And if that pays off, then you go to the second trade, and that one must pay off. And then you go to the third trade, and that one must pay off. And then you go to the fourth trade, and so on. You'll never achieve that. That's not possible. Okay. If you could do that, you would have something that nobody else has. So that's not possible. So really, you're looking at, can I create a trading system that's profitable? And a trading system consists of lots of components, right? So there's no easy, indicator or signal that's a trading system. Trading system consists of lots of components to make it work. All right. Like, think of it this way. You're going to have things in inventory, right? So you have all these things, in inventory that you decided you want to carry as part of your portfolio. Okay. And just like a grocery store, has apples, bananas, and milk, and they're managing those, and some of those things they're going to sell for profit. Some of those things might expire before they could sell it, and it's worthless, but they carry a portfolio of inventory. Okay. And you have to manage it, and you're managing your portfolio risk, right? And then for each each inventory that you have in place, then there's another analysis you do. So you're right. So all of these have their own analysis. So you have your portfolio has tools and things in place for you to analyze your overall risk, and then you could go out there and analyze this. So think of it as a grocery store. Well, you know, how is my grocery store doing? What is my traffic coming in? How much am I selling overall? You know, am I getting deliveries? All this, and then you go to each shelf and say, well, what do I have on this shelf? Do I need more apples? Did I price my apples too high? Did I price them too low and sold out? Am I putting them in the right place? You know, if I buy more apples, what should I pay for it? And so forth. So that's how you're kind of managing the overall system. So you could see that it's not, you can't just sit there and say, I'm going to do one trade. I'm going to do one trade and wait for that to pay off. And then when that happens, then I'm going to go and do a second trade, and I'm going to wait for that one to pay off. And then if that pays off, I'm going to go to the third trade and pay off. That means you'd have to, every single trade you do has to be profit, right? You would have to be right on every single trade, and you're just doing them in sequence. So they're not even working together for you. You're just trying to do something in sequence, and that's not possible. There's nobody that could, if you know of a system like that, I would really like to know about it, and I'd like to see that in action, but that's not possible or practical. So when we look at this, so we're not doing things in sequence. We have to, have a diversified, well-managed, modeled out portfolio in our trading system. And then the other thing that I think people are imagining, that a trade is supposed to make you rich. And that's not gonna happen either, because how do you take a single trade and just like hit the lottery? That's not, it might, people might get lucky and on a trade here and there, but the odds of that are extremely small, right? Extremely small that you're going to hit a lottery on a trade, or that each of these trades are somehow, making huge returns on their own. So the portfolio, how do you become profitable? So your portfolio is going to follow some benchmark, right? You have to get your portfolio to beat a benchmark. And the benchmark, let's call it, is, let's just say S&P 500, right? You're trying to beat so what's your objective? And I'll explain why your objective. You want to, better performance, higher return for less risk or less variance. But this seems boring. Like, well, what's the big deal, right? What's the big deal about beating the S&P 500 by 3%, let's say, consistently with less risk, right? That doesn't seem like that's like such a great amount of reward. But in actuality, if you could do that, then you'd be the richest person. If you could do that consistently. Okay, it doesn't seem like that. Like, well, if I could, let's say it, here you got S&P 500. If it averages 10% per year with whatever volatility, right? If you can create a portfolio, that beats it by 3%, let's say. Beats it by 3%, right? For less volatility. Well, then you've got a really good system. Okay. And that system will make you a lot of money, a lot. But why? Like doesn't seem that much, but this, because once you have that, you could leverage and finance. Okay. That means you could leverage and finance your system. You could short the SPY, use that money to go and employ your strategies, borrow at the risk-free rate, whatever. But then what you did was actually achieve success. Okay. You've done much. This here, if you could achieve this is better than trying to find a call that will double or whatever. This here is a real trading system that has lots of value. Okay. That's like a business, okay, that you've created. So think of it like this. If I could buy a building, let's say I could buy a building for $100,000 cash. And after, my expenses, right? Like after I could rent it out, and after all my expenses of the maintenance, the insurance, the taxes, let's say after all my expenses, right, I have rent left over. And let's say the rent that's left over is $10,000, right? Well, that is a 10% return, right? That's a 10% return. So if I could do this and it's relatively, low risk because I have insurance, I have long-term, let's just say, I hedged off stuff, right? I have insurance on stuff. I have long-term lease agreement with somebody, that it's going to be like this. So now it's like a 10% return, but that doesn't look that high, right? That looks like, well, what's the big deal? It's a 10% return. But if I could finance this, right? If I could finance this and the finance rate, let's say I could get a mortgage at 5%, right? Well, then it becomes a much higher return, okay? Because all of a sudden, let's say I put down 10%, right? Like really my margin, right? What is my margin? Let's say I could do that and finance it. And then all of a sudden, I'm only putting down $10,000, all right? Well, and then I'm financing the rest of the $90,000. So I'm still getting $10,000 in rent. And if I'm getting $10,000 in rent, and let's just say then half of that goes towards mortgage, well, I'm left over with $5,000. But if I'm using $10,000 in capital and getting $5,000 back per year holding my strategy, you could see how all of a sudden that makes a huge difference, right? And then you keep doing that in other places and diversifying. So your goal, right, is not to take an option and necessarily pick something that is going to, go up 300% every time. Your goal is to create a trading system that makes sense, that beats this, right? This is your benchmark that you want to beat. If you could perform better than this, right? If you could perform better than this, that means that all of a sudden you're going to be able to do this. Okay. That's because then you'll be able to finance your trading system leveraged for less risk, and that you'll be able to, if you're beating that S&P 500 upward, if it goes up or down, but if you're outperforming it with lower volatility, then you're going to be able to move to that next step where you use leverage, either portfolio margin or so forth, where then your returns will be amplified. Okay, so the focus should be on a trading system, not on a particular trade. A particular trade goes into the trading system, right? So one particular trade, kind of goes somewhere in there, but the overall focus is the entire trading system, the entire trading system. All right. So kind of wanted to point that out. So when people come in there and start making evaluations, when you're making those evaluations, it has to be all part of the trading system. So, well, I guess, we have a couple minutes to go. If there are no questions, I might just leave it right there.
Are there any earnings coming out on Monday? Because we are in the midst of earnings season, right?
So yeah, let's take a look at the calendar. So that'll be what, July 17th? So I see not really. I mean, just a couple, but it looks like then it starts to later in the week, next week starts to climb. Let me see the following week, right at towards the end of the month, we start seeing a bigger pop. So really nothing Monday that I see on the horizon to discuss right now.
Perfect. All right. It is 9:22. We got about 8 minutes before the opening. Any last questions? People, please pop them in now. We will have a good trading day today. Anything? We don't have any webinars coming up. I have a webinar in 2 Sundays with Dan. His mom actually had a birthday on Sunday, so we had to move it off a week. Actually, there was an article. Let me post that. There was an article in that that you did for Interactive Brokers yesterday. Maybe I'll put that out to the communities.
Okay. Yep. But yeah, we'll talk more about, earnings are going to be coming out, in the following couple of weeks. So maybe what we'll do is start looking at some of the stats and analytics as we get closer to those earnings.
Perfect. All right, buddy. Thank you so much. You have a great day.
Yep. So thanks everyone for joining. Stay safe out there. Have a great trading day. Have a great weekend, and hope to see you guys on Monday.
Have a great day, everyone. We'll see you later, D. Trade in peace.